So as promised, it's the workings anyway. At least if I have time, I'll do the whole thing from the 2016 Examcraft Civmec one. So the first one, stock in hand. There's nothing to do there for the time being. Number two, goodwill has been written off over a 15-year period. So goodwill written off. So we obviously write off from cost. So if we go up and look, goodwill starts off a cost of 75,000. We're going to divide that by 15, and that'll give you 5,000. So therefore, goodwill itself will be its value, which in this case is 65,000. And we take away that 5,000. So use the goodwill at cost, 75,000, to work out the depreciation, and then take your answer away from that 65,000. That's all we do with that. Goods which it cost the firm 14,000 to produce were sent to a customer on a sale or return basis. These goods are incorrectly treated as a credit sale at cost plus 25%. So we know that credit sales shouldn't take place if they're sale or return. So sales and debtors have to decrease, and that stock has to increase. All right. So sales starts off at 1070, and we're going to take away from that the selling price. So it's cost plus 25% is what it was invoiced at. So 14,000 by 1.25 will give us I'll have to work that out. It's probably, so that'll give us 17,500 to take away. So we're going to take away 17,500 from sales and from debtors. So debtors started off 61.6, and we'll take out the 17.5 there. And the stock, right, the closing stock of finished goods 66.5, that has to go up. It goes up by cost price. So stock is always valued at the lower of cost or net realisable value. So cost is obviously lower, so we're going to add on 14,000 onto our stock. So that's number 3 done. Number 4 then, the suspense working. So the suspense, it's a result of discount allowed entered only in the discount account. So discount allowed is discounts are given to discount alloweds are given to debtors. So it should be discount and debtors. So it's gone into discount, but it has gone into debtors. So debtors has to go down by €300. So we'll find our debtor 61.6. We're going to have to take away 300 from that, which means now that the debit side is 300 less than the credit. So to make it equal, we'll have to add 300 on to whatever incorporates expense. So it's general expenses. We're going to add 300 on there. So general expenses and depreciation on buildings are allocated 6% to the factory. Now what I would do with that is I'd highlight that and come back to that last, because there could be more changes to general expenses. Now there probably won't be, but or you could just do it in when you're putting your numbers in, it'll be fine. Alright, so number 7 then, during 2015 an extension was added. The work was carried out by the company's own workers. The cost of labour is included in factory wages. Of course it shouldn't be included in factory wages. So we go direct factory wages, and we're going to take that number out. So our direct factory wages are 278,000. And we'll take out that 20,000. We're going to add it to buildings. Okay. So buildings start off at 850, and we'll add that 20,000 on. So it should be in buildings, not in factory wages. And the same with then the second part, the purchases of raw materials. So the materials costing 23.5 are taken from stock, so it's purchases of raw materials. It's not stock of raw materials, okay? So the purchases of raw materials is 515. We're going to add on that, take out that 20,000. So that gets added onto our buildings. So it's 23,500. All right. All right, so we move on to the next one. Machinery which cost 50,000 was sold in 2015. So our machinery has to go down. Where are we? Plant machinery is 415. And we take away the 50,000 there. So it's 365. Now, I did this yesterday, so it'll be fairly quick, but it's the proceeds from the disposal were 31.7. We'll see that in a minute. It's the company policy to charge a full year's depreciation in the year of acquisition and none in the year of disposal. So when we're going to the depreciation, we don't have to go 12.5% of 415 by whatever months and 12.5% of 365 by whatever months, because we're not charging any depreciation on the 50,000 one this year. So you don't charge any in the year of disposal. So you just have to be careful of that. So it's 12.5%. Depreciation charge for the year is 12.5% of 365. Which is 45,625. Now you still need to know what the depreciation on the disposal was, so as we can work out the accumulated depreciation. So the depreciation on disposal is 12.5% of the 50,000 by the number of years you had it for. It doesn't matter when you bought it in the year. There's a full year's depreciation in 2013 and there's a full year's depreciation in 2014 and there's no depreciation in 2015. So it's by 2 years or by 24/12, so whatever way you want to do it. Okay, so the accumulated depreciation on the one you sold is 12,500. So from there then we can say our accumulated depreciation started off as 105,000. We have to add on this year's charge of 45,625 and then take away the 12,500. And that's 138,125. So when we check if we made a profit or loss, so the value is 50,000 minus 12,500, which is 37,500. You received the check for, it's not an allowance this time, you received the check for 31,700. So we made a loss of 5,800 on that. So the loss in the manufacturing account is going to be 5,800. The last thing then is the check itself. So normally it's included in sale of scrap material or whatever, and you take it out. This time the check was put in a drawer, which means it hasn't been lodged to the bank. So it has to go into our bank working. So our bank had started off we thought we had a bank overdraft of minus 28. Sorry, where is it? Yeah, minus 28.4. And then we have to take away a further, add a check of so we had a bank overdraft of 28.4. Not lodged to the bank account. So it wasn't lodged till 2016, so it's not in the bank account this time. So we will add on. Jeez, I have that wrong. Sorry, bank is 28.7, which is a positive, so it's not a minus. So bank is a current asset, and we're going to add on to that 31.7. So your bank is 60,400. Okay, so just be careful on that the bank is actually a debit, which makes it an asset, or a plus to start off with, and then you're adding in the amount you've received to it. Okay, so that's that one. We've done the depreciation of plant and machinery. We have to do the depreciation on the buildings. And it's 2%. So it's 2% of the buildings figure, which is 893,500. Which is 17,870, is it? Those figures seem wrong. Just check the marking scheme. It seems like a bizarre figure. 893,500. It's 2%, isn't it? It is. Yeah, 893,500. So that's 17,870. Unless there's land. There's land included in this, so we just have a quick check. I'm actually looking at the answer. So it's 2% of 893,500 minus the land of 200,000. See, their land that originally cost 200,000, so you have to take that out, obviously. So I was looking at the marking scheme there, wondering why I was getting a mad answer. So it's 693 that we have to depreciate. So it's 13,870, right? Don't forget you're going to have to split that 60-40. 60% for the manufacturing and 40% for the trading account. It was decided that the entire land and buildings are revalued to 850. So land and buildings go to 850. So they go from 893,500 up to 1.5 million. Okay. So then instead of accumulated depreciation, we've got a revaluation reserve. The revaluation reserve is the depreciation on the land and buildings to date. So 35,000 plus the charge 13,870 plus the increase from 893,500 to 150, which is to 1.5 million, which is what it is, 500 and 893,500. So that's 606,500, which gets added on. Alright, so that's 655,370. as your revaluation reserve. Revaluation reserve obviously in the finance buy. Provision to be made for the following. Debenture interest due at the end of the year, so work out our debenture interest. So we'll go up and have a look at our debentures. So they're 10%. So it's going to be 10% of 150 by the first 9 months. And then 10% of 200,000 for the last 3 months. We just add them together. 16,250 is our debenture interest. So our debenture interest due then is, if we've paid any, we have to take it away. So we've paid 11,250 up here in the question. So that'll be 5,000. Okay. Corporation tax due of 38,000. So there is corporation tax due. So that goes in your trading profit and loss account and your. Just be aware it's a current liability as well. So it goes in its own spot in the trading profit and loss account. 38,000. And it also is a current liability. Alright. So that's that done. Just the last thing is split your depreciation and your general expenses. So the general expenses is 40,800, and we're saying that 60% of that is for the factory. And then the rest of it is will be admin. Alright, so 16,320, and the same then for your depreciation of buildings. So 13,870 is the total. 60% is for the factory. So general factory overheads. And the rest then is for the admin. Alright, so a bit like cash flows, or a bit like published accounts when we did those, you have to split them up. So alright, so that's us done. We can lash everything in there. I'm not going to lash everything in, I'll just tell you where they go. Okay, so so we've got goodwill written off, so that would be a goodwill would be a selling expense, would be admin maybe. Yeah, goodwill written off would be admin. Goodwill itself is a fixed asset. Sales will go in the trading account. Debtors is a current asset, and obviously, well, there's no bad debt provision in this. Stock, so that's your stock of finished goods, isn't it? So that'll go in the trading account and the current assets. Debtors, which I already had, that should have said, check that working. That should have been, I should have just put this 300 up here, so I'll just get rid of this debtors. General expenses, that was being split up, so we can come back to that. Direct factory overheads is a prime cost. Buildings fixed asset. Now, if you remember, buildings was changed to 1.5 million, so I'll just sort of ignore that for the time being. Purchase of raw materials is in the manufacturing account at the top. Machinery itself is a fixed asset. The depreciation of machinery is factory overhead. Depreciation on disposal or what's that? Depreciate that sort of, we're not doing anything with that. I just had to work that out. So again, I was using that to work out my accumulated depreciation, which is going in the fixed assets. So that doesn't go in, that depreciation on disposal. The profit or loss, so it's a loss. So it's a factory overhead. The bank was a current asset this time. Depreciation of buildings was being split up, so that one isn't going in. We'll split that up later. Land and buildings is a fixed asset. Revaluation reserve is financed by. The debenture interest goes in its normal spot in the trading profit and loss account, and debenture interest due is a current liability. Corporation tax will go in the trading profit and loss account in its normal spot, but and it'll also be a current liability because it's due. And then your factory overheads are factory overhead. Your general expenses, you'll write it in as general expenses. Factory overhead for that part, admin for that, and factory overhead for this part, and admin for the second part, which I've got written in. So that's them all there. And then from the main part of the question, let's see what we haven't got to. Dividends paid will just go in its normal spot. Selling will go in selling. Sale of scrap material gets added on in your manufacturing account. Profit and loss balance, that's a plus. They're your opening stock, so finished goods in the trading and the other two in the manufacturing. Admin we've done, purchase raw materials, debenture interest we've done. VAT is a credit, so it's current liability. Debentures in the finance by. General expenses we've done. Discount net is a credit, so that is added on. Direct factory wages we changed, and debtors we changed. Creditors is a current liability. So, and then obviously these three work in progress and raw materials both go in the manufacturing. So hopefully that's of some use to you lads if to go and teach a class. I forgot to do this last night, so we will see you later on.